about to get shocked by what you're about to see. It is officially the easiest trade of the week. Buy calls. Leonardo, that's it. I am freaking unsubscribing right now. Calls. Did you just say calls? Because this is a cuss word on this channel. I can't believe you just said calls, man. This is it. I'm out. Guys, this is officially the easiest trade of the week. Now, you should know that we have accurately predicted every move in Google's earnings over the last 2 years. All the videos are placed on this channel, actually technically over the last 18 months. Now, we did get one earnings announcement of Google entirely wrong, and you should know that as well. And for those of you that like to blame others on the decisions that you make, guys, this is free information. So it's up to you to hit the button. And in this particular case, there's plenty of reasons to do so, but it's up to you to ultimately make that decision. Now, the very bullish head and shoulder pattern. This was actually the same pattern that I have described the previous earnings season, where Google has actually missed the earnings and dropped by $100. And that was the quarter that actually got wrong. Now, since then, the last quarter, we've identified the reverse mirror pattern in Google, and we nailed that, and Google went substantially higher from there to the extent of over $100 plus. Now, the reason why we think this is the ultimate trade right now, and we are suggesting buying 1290 calls, 1300, even 1320 calls, targeting $1,375 by tomorrow in the shares of Google. There's plenty of reasons to be bullish, but one of the main reasons that we teach to identify solid trades in our charts diversity course in making sure that you look at multiple time frames. So right now, guys, we're looking at the daily time frame of Google, and what we've got going on is a nice solid head and shoulder pattern right here. Now, head and shoulder, guys, typically could produce breakouts to the extent of 20-30% within 60 to 90 days. Now, considering that Google has not made a substantial move in over a couple of years, this could be the best trade of the entire month, okay? Because this thing could actually trade all the way up to $1,450. That would be almost a $200 move within a very short time frame of about 10 days. Now, that is the best case scenario. Clearly, you know, it could just pop $50 and trend sideways, but overall, we think it is highly positioned to reach an area of $1,450 over the course of the next 10 days. So besides analyzing this head and shoulder pattern, which is pretty much basic, okay, it is also important to point out some of the preceding conditions to this head and shoulder pattern, and this is this bullish crossover. As you can see, a common trend that is actually happening to some stocks, which I will reveal in the next video, guys. I found out some insane stuff I'm going to share with you in the next video, so make sure you check it out. We identified this pattern. It is called miss and squeeze, which is actually helping stocks escape out of the death cross. And if you know how to trade this, guys, this is it. This is going to be your best month ever. So with that said, this is what I want you to focus on right now, is this part of the chart. You see, Google was heading to death cross formation right here, but was actually able to escape that. Now, this doesn't typically happen, but we've seen it like the number one escaper out of all the bearish moves is freaking Facebook, okay? Facebook is notorious to actually create this bearish death cross formation and then escape it. Now, most of the stocks are unable to do it, so they actually drop after the death cross. But what we're seeing is a particular trend where stocks are now literally getting emancipated by the stupidity of this market, and they're actually escaping the death crosses and they're moving high. Now, in this particular case, this head and shoulder is created after the stock is actually breaking through this bullish formation of a bullish crossover, where the blue line actually crosses the orange line to the upside. Now, also, the middle finger pattern here, as we've pointed out over the course of the last couple of months on a lot of stocks that actually dropped substantially. This particular case, this middle finger is bullish because it's portrayed by the bullish breakout higher in the stock. So basically, it breaks out, it moves lower, they buy the dip, it moves lower again, they buy the dip, it moves to the same level, drops again, buy the dip, but as you can see, it never actually clears this level right here. And now it manages to stay above both lines, orange and the blue line, which is highly critical considering that most of the stocks, most of the technology stocks we've been showing you charts of, including Amazon and Now and all these famous cloud stocks that are, the darlings of the technology sector, they are actually have been literally forming these death cross formations. Now, this is not a common chart in the current market environment. So considering that Google now has been trading between 1160 and 1260 for quite some time, when these bullish formations form, it's important to acknowledge them on multiple time frames. So we can clearly see this very well defined cup with a handle formation here. We can also see it, a very nice strong confirmation on the weekly chart as well. So we've got the short time matched with a longer time frame, and we'll also get multiple confirmations on other bearish momentum moves here, such as on the MACD. You got a bullish crossover going on here. You got very strong accumulation distribution going into the earnings, which tells you that a lot of these institutional investors, even if Google misses the earnings report, guess what they're going to do? They're going to buy it. They're going to buy it just like they bought Amazon when actually finally Amazon hits our level that we've been predicting for over a month of 1650. The moment it drops it, they start buying the shares of Amazon. So the worst case scenario that could actually happen here with Google, we're going to reveal that to you in just a second. But before we go into that, I just want to show you as far as the weekly chart goes, right? It's got it very well defined. If we take it out like a couple of years out on the weekly chart here, it's got a very well defined consolidation between 1,000 and 1260 level, okay? And at this point, this confirmation of MACD crossover is very much bullish. It's confirmed on multiple different various time frame charts here. The only thing that's lagging is the RSI. And once the RSI actually picks up, which we think RSI is going to hit this green area tomorrow on October 29th, after we're going to see some very strong buy volume going into Google after hours and pre-market and all day tomorrow. Now, a lot of stocks have been consistently going higher with some crazy valuations. This one actually trades at some decent valuations. So one of the main reasons we're pointing that out is because that's been the main reason why they've been buying the hell out of Apple stock. So I really think that this one is next. And considering that the market actually is breaking out to all-time highs, yes, it is breaking out to all-time highs, and it's actually meaningful because this time it's not breaking out to all-time highs and dropping like a rock immediately. It is actually looking like the market is trying to sustain the levels, at least pre-market, as I'm trying to record this video for you guys. So market is officially at a level 3,028, 3,030, and it's looking like VIX is going lower, which tells us that this move higher in the market is likely to be sustained at least over the course of the next 48 hours, which is perfect timing for this trade because this bullish move is also confirmed by a breakout of S&P 500 to all-time highs. So what an interesting trade that we're seeing. As S&P 500 breaks out to all-time highs, we think that Google's got a best chance ever to actually break out to all-time highs in the history of Google. So this typically narrow range, narrow considering that's been happening over the last couple of years, this narrow range ultimately will resolve to a breakout higher. This will drive the RSI higher to a formation similarly to here, and possibly RSI could shoot up all the way to 90. Right now it's about 61 when we're looking at the weekly chart. So RSI to the moon, the stock could actually hit, with RSI hitting that level of 80.90, it could actually hit a level of about $1,450. Now, if we take a closer look on the daily chart, guys, we're noticing this bullish formation, the bullish formation right here, another bullish formation. We're noticing that accumulation distribution every time it gets to this level, they're buying, they're buying, they're buying. And we're definitely noticing some renewed interest in the stock, confirmed by the uprising volume on the buy side. So that tells us that there's a lot of institutions that are very much interested in buying the stock, not only buying it ahead of earnings, but actually supporting it despite of what the earnings announcement is actually going to be. So basically, to summarize this video, guys, 83% probability of Google stock actually doing this over the course of the next couple of days. Move higher, pull back, move higher, pull back, move higher, pull back. So if you don't want to play this ahead of earnings, that's fine. I think, however, it's going to move rather fiercely to the upside. Possibly $100 to $150 move here is what we're calculating. But if you try to trade this tomorrow on the 29th, just time the pullback and just get in on the pullback. That's all you got to do. Just get in on the pullback. That's it. Nice and easy. Now, for those of you that are thinking, okay, well, what if it drops? What if it does miss the earnings? And what if it does do exactly what Amazon did, which Amazon tanked like crazy to the extent of about $160? So this actually has a 17% probability. Why? Because the way that we look at the charts and the way we analyze them, if you take a look at the Amazon chart, completely different scenario. You had a death cross there. You had a head and shoulder pattern. You have all different type of patterns going on. But in case an odd similarity happens in the way that Google could actually miss the estimates, okay, we could see a slight probability of it doing this followed by this uptrend right there. Now, the importance of understanding this, if you're taking a look at Google options today and you're trying to really figure out what is actually the best way to trade Google, well, the best way to trade Google, if you want to cover this 17% probability, is to actually buy Google calls that expire not this week, but next week. If you actually look, they're only priced just a dollar or two higher than the ones that expire this week. And, so this could actually make it for a very beneficial trade, considering you're only paying about 10% more, and you're buying yourself an entire extra week. So if it's actually going to stair step higher all the way, and you want to stay with the trade, and you want to cover this 17% probability, then buying the following week expiration instead of just buying this week is actually a very sharp and smart move, because even if the move lower initially takes place, by next week it could still easily hit the targets of 1375, 1450. So basically the idea is this: buy some options that expire this week, buy some that expire next week, okay, and by covering the next week expiration, you're actually capturing this probability of this miss and squeeze type trend that we're seeing and observing in many stocks right now. So basically, 1375 target by tomorrow, October 29th, 1450 by next Friday, November the 8th. Let's rock. I'll catch you guys on the next trade soon.